focus on a specific stock then. Piramal Pharma reported what was a strong margin recovery sequentially, while profit also saw a strong growth. I did catch up with Nandini Piramal, Chairperson at Piramal Pharma, to discuss their Q4 performance and began by asking about the key trends in the CDMO business in the quarter gone by.
Overall, the last 2 years actually have been very good for the business, and I would urge people to look at the yearly year-on-year revenue, where we've actually grown 14% over the year. So I think we've had good, we've seen a 500 basis points improvement in the EBITDA margin for the year, and we've actually seen a turnaround in the net profit. So, we had a 190 crore loss in FY23, and we've seen a 90 crore profit in FY25. We've also reduced our net debt a bit to EBITDA from 5.6 times in FY23 to 2.7 times in FY25. So we've seen, again, a very good increase in innovation-related work this year. It crossed over 50% of our CDMO revenue, and we've seen a strong growth in our differentiated offerings and our unpatented commercial offerings.
Okay. Well, Nandini, I just wanted to, drill down on biotech funding, the scenario in the US. How did that impact you all this quarter? Was there any kind of improvement?
So I think overall there has been an uneven recovery in biotech funding, and I will say there is a lot more uncertainty going forward. So we have seen decision-making continuing to sort of be prolonged. But I will say there is reasonable biotech funding for late-stage clinical assets, so that's where we've seen the good order demand there. But I would say the early phase biotech funding still remains uneven.
Okay. Could you just give us more details about the inhalation vertical this quarter, as well as your ADC platform?
So the ADC platform, I think we've seen a lot of growth there. It's a very hot area. We've seen growth both in the standalone Grangemouth facility, where we have the bioconjugation, but we've offering of integrated services, which includes the payload linker, the fill-finish services at Lexington, as well as the early phase MAB platform in Japan, and a peptide facility at Dubai. We've actually seen very good demand there. So I think we're one of the first people. We've done bioconjugation for about 20 years now, and amongst the commercial assets that are on market, we've actually had a hand in a lot of them. So I think people come to us for the science, and they come to us for the customer flexibility and the customer service that we show.
All right.
In our inhalation anesthesia, we've also seen reasonable growth. We actually opened our commercial facility at Digwal in Telangana in March, and we should see that actually coming on stream. I mean, we've done some sales so far before the end of the year, and we should see more impact of that coming on stream for the rest of the year as the regulatory kind of submissions happen.
Okay. Your OTC business did well. It was up around 15-odd%. Can you tell us more about the India consumer healthcare segment? What led to this growth, and what are you projecting?
So overall, India consumer healthcare business reached 1,000 crore milestone for us, and I think that's in a way a significant milestone because it demonstrates the scale of the business. We've seen our power brands, which are Lacto, Little's, iPill, also grow at about 20% over the year, and it's a mix of astute media and trade promotion that we've been continuing, but also new products and new SKUs that have contributed to this growth.
Okay, all right. That's on the India consumer healthcare segment. But the roadmap to get to $2 billion and 25% margins by FY30, how would you propose that? What's the roadmap?
I think overall, we're still excited and we still believe that we're on track for the FY30, but I will say that there is near-term uncertainty whether you say the macrons, overall macro, whether we talked a little bit about uneven biotech funding over the year, as well as, trade and tariffs. So I think I would say that the next year in the short term might be a bit uncertain, but once the uncertainty resolves, I do believe that we have one of the best networks. Especially we've been investing in the US for a while. We just actually said we're going to do a $90 million investment in Riverview for the payload linker, as well as continuing to do a sterile fill finish in Lexington. So we have the capabilities and the capacities. If people decide they want to onshore in the US, we do have those available.
Okay, all right. The company is looking to invest $90 million to expand 2 US facilities. What is the strategic rationale behind that?
So we talked a little bit about the ADCs, right? They're, again, a hot subject. The Riverview facility has the ability and has done some work in payload linker, which is part of the ADC and the integrated offering. And we're expanding those facilities because we've seen our clients actually want us to do more in that. So that's something that will actually come on stream over this next year. The Lexington fill finish, again, is a sterile injectable facility that we have customers there that are doing work. And as those projects actually go through the pipeline, we were running up against our own capacity bottlenecks. So as these customers succeed, we would like to keep them rather than having them go elsewhere. And so that's why we're doing the expansion. Now, that will take a bit longer. It will take at least till, calendar year 27 for it to come online. But that's something we're quite excited about.
Will costs increase for Piramal Pharma with onshoring? And is this in line with the broader trend of the US government asking for increased onshoring?
I think overall, I will say it's a bit too early to say about how the US will respond. So, but I will say that there are various customers that are looking at supply chain diversification and how do they want to continue to manage their supply chains. I will say that yes, costs are higher in the US. For manufacturing, but for on patent things, the prices, in a way, are also higher. So customers do understand and do manage and where costs are.
Okay. What is your sense in terms of the executive order from President Trump? Do you think that is going to be beneficial for companies such as yours when it comes to opportunities to reduce cost of production?
I think right now, honestly, I'd say it's a bit too early to say of how it will all shape out because it is a statement of intent, but we have to understand the details behind it.
And the expectations on tariffs?
Again, I think too early to say as to what it will shake out to be.
Okay, all right, fair enough. Is Piramal working on any GLP-1 drug opportunity?
I think that the focus is we'll continue to focus on our peptides and we'll work on what our customers want us to do.
All right. Semaglutide is going off patent in many countries. Lots of CDMO players have said that it is an opportunity for them. Where do you stand?
I think at the moment, as I said, I don't think we're working on something right now.
Okay, all right. That's a tight-lipped Piramal Pharma there, but nonetheless, they would be expanding 2 of their facilities in the US markets. That's what they've mentioned should come on stream probably by 2027. The stock is down around 4% at this point in time. Debt figures continue to remain high at around 4,000 odd crores for that particular stock. Well, we'll take a short break and come back with a lot more. Stay tuned.